Let me be completely honest with you right now. Most people will never build real wealth, not because they don't work hard enough, not because they don't earn enough money, but because nobody ever sat them down and explained how wealth actually gets built quietly, slowly, almost invisibly in the background of a normal life. And that is exactly what we are going to fix today. You already know something is off. You work hard every month, the money comes in, and somehow it just disappears. Bills, groceries, rent or mortgage, car payments, maybe a dinner out because you deserved a break after everything you have been carrying lately. And then the cycle starts again. And every single time you check your bank account on that last week of the month, that familiar sinking feeling shows up, that quiet panic, that whisper in the back of your mind that says, what am I actually building here? That feeling is real, and it is more common than you think. Here is the thing that most financial content will never tell you. The gap between where you are right now and the life you actually want is not as wide as it feels. It just requires understanding one single mechanism that most people overlook their entire lives. And once you understand it, once it truly clicks, you cannot unsee it. You will look at money completely differently from this moment forward. Now, before we go any deeper into this, because we are going to go very deep, I want to mention something. We have related programs linked down below in the video description. These programs are designed for people who are serious about applying what they learn, rather than just watching and walking away. And here is what I want you to understand. The people who are watching this right now and taking no action on their finances, they will still be in the exact same position a year from now. The people who actually step into deeper learning and apply it consistently are the ones whose lives quietly transform. The programs below are not for everyone. Honestly, if you are someone who is comfortable staying where you are financially, those programs are not for you. But if something inside you right now is saying enough is enough, that link is worth a look before you forget. Now let us talk about what consistent investing actually means, and why it builds real wealth in a way that almost nothing else can. Picture this. You are standing in front of a snowfield. In your hands you have a tiny snowball, barely bigger than your fist, and you start rolling it forward. At first, absolutely nothing dramatic happens. The snowball moves slowly. It picks up just a little more snow with each rotation. You feel almost ridiculous because the progress is invisible to anyone watching. But you keep rolling, and then something shifts. The snowball starts picking up more snow per rotation simply because it is bigger, and then more, until eventually that snowball is enormous and moving on its own momentum, pulling in everything around it. That is compound growth. That is what consistent investing does to your money over time. And here is where the numbers become genuinely emotional if you let them sink in. Every dollar you invest today does not just sit there. It starts working. It earns returns. And then those returns earn returns. And then those returns on the returns earn more returns. The technical word is compounding. But the human experience of it is watching your money multiply while you sleep, while you work, while you live your life. The cost of not starting is not just the money you did not invest, it is every single dollar that money would have multiplied into, every layer of growth that never happened because you waited. That right there is the real pain point, not the amount you do not have today, but the exponential future that quietly dies every time you postpone starting. Think about the person who puts away a small, consistent amount every single month without fail. They do not try to time the market. They do not wait until they feel financially ready, because that moment rarely comes. They simply invest consistently, through the boring months and the scary months and the months where the market dips and everyone around them panics. They stay in. And year after year, decade after decade, that consistency compounds into something that shocks even them when they finally look at the total. Now contrast that with the person who waits. They are smart. They are motivated. They intend to start when things calm down, when they get that raise, when the market feels safer. But the waiting is costing them in a currency they cannot see, time. And time in investing is the most valuable asset that exists, more valuable than strategy, more valuable than stock picks, more valuable than knowing all the right terms. Every month of waiting is a month of compounding that never happened. This is why people who started early with very little often end up with more than people who started late with a lot. The math does not lie, and once you see it clearly, you realize that starting small and starting now absolutely destroys the strategy of waiting to start big. But here is where I want to get deeply honest with you about the emotional weight of this, because it is not just about numbers. There is a version of your future life that is possible, a version where you are not anxious every time an unexpected expense shows up, a version where you actually have choices, where you can make decisions based on what you want rather than what you can afford, where retirement is not a terrifying question mark but something you can actually see taking shape, where the people you love have a safety net that did not exist before. That version of your life is built quietly, month by month, through consistent investing, through the discipline of paying your future self first before you pay for anything else. And the beautiful, almost cruel irony is that the sacrifice required each month often feels tiny compared to the freedom it eventually creates. Now let us talk about what gets in the way. Because the obstacles are real, and I want to acknowledge them without softening them. The market goes down and it feels like you are losing everything. That fear is completely human. But here is the truth that separates people who build wealth from people who just tried to. A market drop for a consistent investor is not a disaster. It is a discount. You are buying more of what you own at a lower price. Every single market crash in history has eventually been followed by new highs. Every single one. The people who panicked and sold locked in their losses. The people who stayed consistent came out ahead. The second obstacle is the belief that you do not earn enough to invest. And this one is painful because it feels true. But the amount matters far less than the consistency. Starting with whatever you can start with, even if it feels embarrassingly small, builds the habit, builds the account, and builds the compounding machine that grows with your income over time. Waiting until you earn more to start means you lose all the compounding time in between, and that time you cannot buy back. The third obstacle is complexity. Investing feels intimidating because there is an entire industry built around making it feel that way. But the actual core principle is almost embarrassingly simple. Put money in consistently. Diversify so you are not dependent on one thing. Leave it alone long enough for it to compound. That is the foundation. Everything else is refinement. What separates the people who actually do this successfully from the people who know they should but never quite do is usually one thing: guided application. Understanding the principle is the first step, but applying it consistently, navigating your specific situation, building the actual system that runs automatically in your life while you focus on living it, that is where the real transformation happens. And that is exactly what the programs linked in the description below are built to help you do. These are not for people who are satisfied with where they are financially. These are for people who are genuinely done with watching time pass without their money growing. The people taking action on their financial life right now are not the people with the most money. They are the people who decided that their future self deserved better than another year of good intentions. If that is you, the link is there. Go look at it now while this is fresh, while this actually means something to you. Because tomorrow, the urgency fades. The routine pulls you back. And the compounding that could have started today simply does not. Your future is not built in one dramatic moment. It is built in the quiet, consistent, almost invisible decisions you make right now.